Mastering the Stock Market, Strategies for Profitable Trading. Welcome back to our channel, where we empower you with valuable knowledge and strategies to help you master the stock market. In today's video, we'll be diving into the world of profitable trading and sharing some effective strategies that can lead to your financial success. So, if you're ready to take your trading game to the next level, make sure to watch this entire video. Let's get started. Before we dive into the strategies, let's first understand what profitable trading is all about. Profitable trading involves making informed decisions to buy or sell stocks to generate a profit. It requires careful analysis of market trends, company performance, and a disciplined approach to risk management. By mastering the art of profitable trading, you can potentially create a sustainable source of income. Let's talk about fundamental analysis, unveiling hidden gems. One of the key strategies for profitable trading is fundamental analysis. Fundamental analysis is a crucial approach for successful trading. It revolves around examining various aspects of a company, such as its financial condition, management team, competitive edge, and industry trends. The goal is to pinpoint stocks that are undervalued but possess robust fundamentals, thereby revealing hidden gems with significant growth potential. To effectively employ this strategy, one must exercise patience, conduct extensive research, and adopt a long-term investment outlook. By delving into a company's financial health, investors can gain insights into its revenue, earnings, and overall stability. Evaluating the management team helps assess their competency and track record, which are essential for future success. Analyzing the competitive advantage helps determine a company's unique strengths that differentiate it from others in the market. Additionally, keeping an eye on industry trends helps identify opportunities and potential risks. Overall, fundamental analysis enables traders to make informed decisions by considering the intrinsic value of a stock, rather than relying solely on market sentiment. This approach emphasizes thorough evaluation and a deep understanding of the underlying factors driving a company's success, ultimately uncovering hidden gems in the market. The next one is technical analysis, riding the market waves. Technical analysis is a potent strategy for trading that revolves around the study of price charts, patterns, and indicators to forecast future stock movements. By examining historical price data and identifying trends, support and resistance levels, and chart patterns, traders can make well-informed decisions. This approach enables them to capitalize on short-term price fluctuations and leverage market trends. Price charts provide a visual representation of a stock's historical price movements over time. By analyzing these charts, traders can identify patterns such as triangles, head and shoulders, or double tops/bottoms. These patterns can offer insights into potential future price movements. Support and resistance levels are specific price levels where a stock's price has historically shown a tendency to reverse its direction. Traders use these levels to determine potential entry and exit points for their trades. Indicators are mathematical calculations applied to price data to provide additional insights into market trends and momentum. Examples include moving averages, relative strength index, RSI, and MACD, moving average convergence divergence. These indicators help traders gauge the strength and potential duration of a trend. Technical analysis does not focus on a company's fundamental aspects but rather on price action and market psychology. It can be a valuable tool for short-term traders looking to ride market waves and take advantage of price fluctuations. However, it's important to note that technical analysis has its limitations and should be used in conjunction with other forms of analysis for a well-rounded trading strategy. Moving to next one is risk management, protecting your capital. No matter how skilled you are, trading involves risks. Irrespective of your trading skills, it is essential to acknowledge and address the risks associated with trading. Risk management plays a crucial role in protecting your capital and ensuring long-term success. Implementing effective risk management strategies is vital. Setting stop-loss orders is a fundamental risk management technique. By determining a specific price at which you are willing to exit a trade to limit potential losses, you can protect your capital from significant downturns. Diversifying your portfolio is another important risk management practice. Spreading your investments across different assets, industries, or geographical regions can help reduce the impact of any individual investment's performance on your overall portfolio. Limiting the percentage of capital at risk per trade is also key. By defining a predetermined percentage of your capital that you are comfortable risking on each trade, you can prevent excessive losses and preserve your capital in case of unfavorable outcomes. Preserving your capital is essential for weathering market fluctuations and seizing future opportunities. A disciplined and well-executed risk management approach contributes significantly to overall financial stability and profitability. Remember, successful trading is not solely about maximizing gains, but also about effectively managing risks. By prioritizing capital protection and employing sound risk management strategies, you can enhance your chances of achieving sustainable trading success in the long run. Lastly, developing a trading plan, discipline, and consistency. To achieve profitable trading, it's vital to have a well-defined trading plan. To attain profitable trading outcomes, it is essential to develop a comprehensive trading plan. Your plan should encompass clear objectives, risk tolerance, strategies for entering and exiting trades, and specific rules for executing trades. By adhering to your plan with discipline and consistency, you can steer clear of impulsive decisions influenced by emotions. A robust trading plan serves as a guiding framework, ensuring that your actions align with your objectives and enhancing your probability of success. It enables you to navigate the market with a focused approach, adapt to changing conditions, and make informed trading decisions. Remember, regular evaluation and adjustments to your trading plan are crucial as market conditions evolve. By maintaining discipline and adhering to your trading plan, you can cultivate a structured and systematic approach that contributes to long-term profitability. Congratulations! You've now learned some essential strategies for profitable trading. Remember, mastering the stock market is a journey that requires continuous learning, practice, and adaptability. By combining fundamental and technical analysis, implementing effective risk management, and developing a disciplined trading plan, you can increase your odds of achieving profitable trades. So, start applying these strategies and watch your trading skills soar. If you found this video helpful, make sure to give it a thumbs up and subscribe to our channel for more valuable content. And don't forget to click the notification bell so you never miss an update. If you have any questions or want to share your trading experiences, feel free to leave a comment below. Thank you for watching, and we'll see you in the next video.